Morgan Stanley has come out with a note on India and other emerging markets. Now, Morgan Stanley is placing India versus other emerging markets in their strategy list. And what indeed is the outlook on India? Let's find out, because yes, there is an upgrade. But why is there an upgrade? And exactly where is China getting placed vis-a-vis India? Let's find out from my colleague Shomit. He's here. Shomit, it's a thumbs up for India from Morgan Stanley's side. They see valuations less extreme now in the Indian context. They've also put a downgrade on China, saying India's future looks like China's past. If you can put that in context with that note that we are looking into that came out from Morgan Stanley. Shomit.
Morgan Stanley came out with this big note on the emerging markets, but the most important thing to notice here is that India's weightage has been increased to upgrade, has been actually upgraded to overweight. Now they have increased the ranking of India from number 6 to number 1, and there are various factors on the back of which they have done this. Firstly, the valuations are relatively cheaper. Strong FDI flows have been seen in the country. Along with this, there's strong Capex and profit outlook. Now the brokerage is expecting a secular trend towards a sustained superior dollar EPS growth for India going forward. Now, along with this, they're also saying that the young demographic profile and lower per capita income, the brokerage believes that India is at a start of a long wave boom at the same time when China is nearing an end of that wave boom. Now, they're saying that the household debt to GDP in India stands at around 19% as against 48% in China, while the insurance savings of Indian household is just 2%. So this is also expected to increase going forward. They're also saying that the manufacturing service PMIs have rallied consistently since the end of COVID restrictions, while we have not seen similar thing happening in China. Now, they're also saying that, simply put, India's future looks to be significantly better when compared to China. Now, they have upgraded India's rating to overweight, and they have introduced the 75 basis points weightage to India, and they are also saying that they are now overweight on industrial space also, along with the financials and consumer discretionary. They are believing that these three sectors will be the major beneficiaries of India's structural growth story going ahead. Now, some stock specific changes also. They have added L&T and Maruti to their focus list, while they have removed Titan from their focus list.
All right, so that's the kind of detail that's emerging as far as Morgan Stanley's note on emerging markets, and now they've been placing India right at the top of the heap when it comes to emerging markets. Let's get further perspective on this, and for that, independent market expert Mahantesh Sabarad with us, along with the founder of Hercules Advisors, Aditya Shah, is here with us as well. Great to have you, gentlemen. Do tell me, Aditya, when Morgan Stanley talks about India's breakaway trend to the upside starting 2021 as an outperformance on the MSCI emerging markets compared to that of China, for one, I want to ask you if you agree with the reading of that chart, and if so, what do you put it down to? What has changed since 2021?
See, Vikram, this has been coming ever since 2014 and 15, where government has tried to make structural changes to the economy, on GST being one of the biggest structural change that the government had made. And on top of it, now the government is also concentrating on getting manufacturing into India. So what I say to people is, India is not the dragon, it is an elephant, but it moves slowly and steadily. But once it starts moving, we will find that enormous opportunity in India is there, because we are underpenetrated in each and every aspect of any industry that is there. For example, in autos, in manufacturing, in consumption, all of these spaces we are very underpenetrated. So I'm hardly surprised that people are waking up and taking notice of India. In the next 10 to 15 to 20 years, we will find that India continuing to deliver on the growth opportunities that are there. And at some point in time, we already are, and we already will be the fastest growing economy. So China is slowing down, India is moving forward. That's the whole theme that we are playing on. However, having said that, the Indian economy is doing extremely well. On the stock market side of it, valuations are extremely punchy. There we need to be very careful. But there is no case to be not bullish on India. And as you already know, every time we've talked, I've been extremely bullish on India, and we continue to be so.
Bullish about the India growth story and how the markets are likely to perform. That's Aditya. Mahantesh, do you agree that note is speaking of India's reform and macro stability agenda, that this current scenario supports a strong Capex and profit outlook as far as earnings are concerned as well? Would you agree with that, looking at the kind of earnings reports that we've got in the recent past across the board, not just this earnings season, but in the last few quarters?
Let me touch upon the capex aspect in terms of what's happening really in India. That's been a definite growth in capex that we are seeing. There are three indicators that you can look at. Number one, the non-food credit growth has jumped up quite sharply. The banking credit growth, as we normally know it, has jumped up quite substantially in terms of year-on-year growth. The second indicator you can look at is the overall PMI, both services PMI as well as the manufacturing PMI. Services PMI, if I'm right, is at a 13-year high right now, whereas manufacturing PMI is at around 57.7 thereabouts, which is also relatively quite high. The third indicator one can really look at in terms of what's happening with the underlying economy is the GST revenue growth. Now, one may argue and say that the GST revenue growth is linked to underlying inflation, is also linked to better compliance or larger services and goods coming under the purview of GST. Either way, that's still good news for as far as Indian economy is concerned. So these indicators being on a strong footing would tell us capex will continue to grow. Not just that, you will also have the lagging parts of the economy starting to really grow. For example, if you look at the one of the lagging parts of the economy is in terms of freight traffic originating both on the railways as well as the roadside. That
Yes.
growth is very tepid
Right.
right now.
But like
And
Aditya is also saying
expectations
that growth in several sectors where we remain under-penetrated, that's really the growth story that we are talking about over here. But Aditya, they are speaking about valuations in the Indian markets. Their note says that valuations are less extreme. Do you agree that valuations were more extreme and now we are seeing some kind of, sobriety come into the markets? Would you concur with the view that's offered in that note by Morgan Stanley?
The valuation you have to look at from time perspective as well. Point number one is everybody knows now India is a growth story and everybody wants to come and invest into India. So that is creating some bit of euphoria within the small and the mid cap space where people need to be extremely careful and invest in very high quality companies with good businesses. Point number one. Point number two is if you are wanting to invest for the long term, and by long term I mean 5 to 10 years, I think that the valuations are still very reasonable and you can go ahead and invest. So my only advice to people will be don't get carried away by the euphoria that is India. Stay invested in very high quality companies and continue to stay invested for a period of 5 to 10 years. And you will find India will be one of the top wealth creator market across the world in the next 5 to 10 years.
True that. But, Mahantesh, while these parallels have always been drawn about the trajectory of growth, these parallels between China and India, now with a downgrade that's coming in on China from Morgan Stanley and a remark that India's future looks much like China's past, is that an indication to you that India's manufacturing sector story is about to see a great pickup? Or is the line of growth likely to be different in India's case compared to China's?
sector is among the laggards right now as far as India is concerned. So certain actions have been taken by the government to revive the sector. PLI is one of them that hopes to revive manufacturing activity in India. You also have the overall corporate tax being reduced to help allocations, more allocations towards capex, particularly from the manufacturing side. And we also have a situation where our exports are really very tepid. Exports of manufactured goods actually is very poor. So so the trajectory vis-a-vis China's growth has been buttressed by a large manufacturing kind of growth. We always hear the term that says China is the factory of the world. India may want to be the factory of the world in the future, but that's really not happening at the pace that China did in the past. So,
Yeah.
so my sense is that our trajectory will be slightly different.
Right.
India's trajectory will be probably led by, newer technologies. Could
Yes.
be AI, could be some R&D and so forth.
Exactly. Aditya, when they speak about this long wave boom in India, even as they are pointing towards China ending their long wave boom, They speak about specific sectors. They speak about financials, consumer discretionary, industrial sector. Which pockets of the market do you believe will propel this boom in India if they are to be fed by, like what Mahantesh is saying, by AI investments and activity also, of course, in the retail sector? Which are the pockets of growth, you think?
See, it's very clear that India is a very domestic-oriented economy, and those sectors should continue to do extremely well. We've seen credit grow at about 20%. We will see consumption will keep moving up as majority of India's young population continues to really spend. So across consumption sector, across the manufacturing sector, across the financial sector, across the financialization of savings scheme. So these are four, five sectors, and of course, in manufacturing, you have chemicals, you have pharma, and other manufacturing as well as auto and other things. So in my opinion, domestic facing economy stocks, as Morgan Stanley is also saying, those will continue to do extremely well. And that's where the real gist is. I've always advised keep investing in all of those sectors because as consumption keeps growing, you will find you will make a lot of money.
If this is going to drive growth, if all these sectors put together is going to keep the number one spot for India in the emerging markets list, Mahantesh, do you think we're going to sustain that position when it comes to drawing global investments? What are the risks that you see to this on the horizon?
So one of the risks is the credit outlook for India per se. We haven't seen any major credit upgrade for the country, nor have we seen actually the debt levels come down. The moment we see that situation arising, can we attract more and more foreign funds? Now, we are attracting FPI kind of flows, we are attracting FDI kind of flows, but those are mostly equity led, not necessarily debt led. And if you would understand, majority of the debt flows would come into infra kind of projects or infra sector. I think India needs badly money for the infrastructure. The government has been doing its bit. That's why we see a lot of road building activity, but it's all coming through debt, which is raised domestically. We need debt to be raised internationally. And for that, a vital piece of the jigsaw puzzle is the credit rating for India per se. So I would reckon it will take some time, not necessarily immediate, but to talk about foreign fund flows, FPI and FDI flows are still strong.
Well, we look forward to all the positive kind of news coming in as far as the growth in the Indian markets are concerned, led, of course, by the situation on the ground. We're talking about Capex, we're talking about investments in new technologies like AI, and all of that perhaps is going to be a different trajectory of growth compared to that of China, even as India seems to be on the top of the heap when it comes to emerging markets, at number one position, at least by Morgan Stanley's kind of reading. But Mahantesh and Aditya, thank you as always for joining us on this edition of India Tonight.